The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on? We're off 2 points on the S&P. The Dow's off or up 91. The Nasdaq's down 24. The Russell's off 5. We passed a spending bill apparently for the next 2 years, almost as big as the one when we were thinking that we were going into a depression. Seems like not a lot of people happy about it. I think the market thought maybe it was going to go lower on this news if it got vetoed. It didn't. A lot of government spending, and that's why the Dow's up 91. Those military contractors getting a lot of love today. NASDAQ not so much, as we said, off 24. Russell's off 5. But no real sign yet of a low, although I'm seeing a lot of stocks line up. So we'll see how they close out today. I don't think I'll probably be buying anything today. I bought one long-term position yesterday. Earlier in the day, it was up, and it's still up. And a great one-day turnaround for that one. So found one, got a good position in it and up, and able to move my stop up a little on it. So feeling good about that one. But we'll have a lot more to talk about throughout the day. We'll look at a lot of those charts. You can always give me a call at 877-927-6648. I think from looking at all my charts last night, this morning, and going through some of them before lunch today, that the money is probably going to be in individual stocks. I have a feeling that we're probably looking for something like in the next move higher, maybe 2,720, maybe somewhere in that range. I'm not looking for a retest of the top, but also it looks to me like we're kind of oversold. We're getting a market that could be, especially in the indexes, very range bound in the very near future. So that's what I'm kind of looking at. I'm going to try to outperform the market by going to individual stocks. I don't see a great deal about being in the leading and broad indexes. Maybe that'll change. But for the most part, it just looks like maybe a lot of tough sledding as we go forward, and maybe even a little bit lower before we go higher. It may take Monday, it may take a weekend to see people coming off. I said I thought that the market would have a fairly good bottom once we saw volume. Well, we're finally seeing it. Yesterday, we had a little bit more volume. Would be at 208 today. 4.3 billion shares on the U.S. equity market summary from the CBOE. Now, if we look at that just in the consolidated tape of the NYSE, let's take a look at that. It's just a little over 2 billion shares. So not light and not heavy, but we could probably, we had that kind of volume yesterday, get a little lows in here today. My sector indicators could turn at the close today. We'll see that tonight and have it out in my newsletter on Monday morning. But I think we're very close to a turn higher. But as always, wait for the whites of their eyes to fire. I don't think if you're long-term trading, probably not going to be a big deal if you get in 50 cents higher or lower. But if you're doing a swing trade, I think it matters. And there are a few stocks that already bottomed and popped. certainly the semis look a little bit less appealing here, and we'll talk about that today. What else is going on? That seems to be a lot of it. Do I have this up? Yeah, I do. Let's do a little bit of history.
And it's all just a little bit of history repeating.
On this day in 1839, the initials OK are first published in the Boston Morning Post. Meant as an abbreviation of All Correct, a popular slang misspelling of all correct at the time. OK steadily made its way into everyday speech of Americans. This was not uncommon during this period. Youngsters loved the idea of misspelling words intentionally to tick off and trigger and troll the adults. Can you think that anything like that happens today? Then abbreviation and use them as slang when talking to one another so that the parents couldn't hear, just as teenagers do today with their own slang based on distortions of common words, and now horrible emojis of poo, which seems to be the most important thing that a kid can have on his phone now, is a little picture of poo. Anyway, I think that's about it. Let's go ahead and troll the adults. Yep, there's not much new in this world, Horatio. That's a horrible version of that Shakespeare under, what is it? I'll have to think about it now, but it's something about there's more under the sun and skies, dear Horatio, something like that. They'll be there. Anyway, wanted to start off looking at Micron. I said last night I thought I'd like to see this thing come down to about 50 before it was a decent deal. Looks like we're halfway there. At 63.42, we saw this thing spike the high and reverse. A couple of days later, it's rolled back over. Now, you had some decent volume at that high, so it can get retested. What we do want to look and see is these candles pretty much starting on the 5th of March that had 70 million shares. You want to see those kind of hold. You got a little bit more today already with 94 million shares. So this is going to come down for a while. And again, if you come down on volume, then normally you don't just end up with an instant V bottom. You get something else, which is, how can I say that? You're going to get a consolidation, or you're going to get further moved down. So I'm thinking that somewhere around that $50 level, you will start to see the consolidation. If you get a 7-day consolidation, that might be the place to find for Micron. I don't think it's going to repeat its massive run, but you might get a $50 to $63 run on it, and that's still 20%. Last time I did higher math, so we'll look at that. Going to be in the 3:30 hour with Tom O'Brien, so we'll be talking some technology, a lot of news out in that space, a lot that wasn't covered because everybody had to talk about Facebook. We'll look at Facebook because I think I've got a new theme song. Everybody tell me what I want. My new theme song for Facebook.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, it seems to me the siren seems to be the hardest word.
Now, I think that's probably going to be appropriate for Facebook for a while. It is down yet again today. Is there anything really big happening today? And it could be bottoming out. But I imagine that we'll have Mr. Zuckerberg singing that Elton John song for a while. So sad. I forgot how good that song was till I heard it last night, and I knew exactly that was it. I could have gone with the old
I'm sorry.
I could have gone with the old I'm Sorry song, but I use that for too many other things. I think we needed a specialized one for Mr. Zuckerberg. Now, what are we doing today? Well, we went in and down to 129 million shares at 161.95. Today, just about 32 million shares. So this 161 area looks like it's going to hold here, at least for the moment. We are starting to hear rumors that within 2 weeks, there will be a congressional investigation, and Mr. Zuckerberg's going to be asked to put his hand in the air. And some people are saying that some Congress people are thinking about making it rather adversarial and make it look like he is the tobacco companies, where they had to do the exact same thing in their big mea culpa. But maybe he learns the words to sorry seems to be the hardest word before he has to do his little dance on the catwalk for the Congress. Anyway, 32 million shares. So, certainly less than the 129 that this thing spiked on 4 days ago. About the same volume as that September 25th low of 2017. So we might have just a little shovel of dirt underneath the keel of the sinking ship that is Facebook. A lot of stuff going on, a lot of moving pieces in this company, and a lot of things going against a lot of these particular FANG companies, especially what we talked about yesterday, which is the tariffs or taxes and restrictions and additional legislation. Seems to me like this sector is not going to probably see its recent highs anytime soon. You can give me a call at 877-927-6648. Let's see what else we have out here. Got a Citibank. I pronounced Citi slightly different than you do. I think the thing's going to crack. They've done some things in the last 24 hours that will tick off about half the country. So I'm pretty sure that these guys, that even you've already busted the low today on higher volume than the November 15th low. You had 17 million shares. You already got 18 million shares today. So you've busted Citigroup's low. And what's next in it? About $66. Looks to me like the next possible level of support. But I suspect they've made their highs for a little while, and because they're getting into areas above their pay grade, I would suspect that they do not, probably one of the weaker ones. So let's take a look also for Pete, who doesn't say where he's at. So he's apparently from Lutz, Florida. Just tell me where you're at, because I need two things. I need two pieces of information. I need roughly where you are in the country, and I need to know your name. But if not, then you're just in Lutz, Florida. Texas Instruments, again, these guys don't make the most expensive products on the shelf for electronics. They make a lot of what engineers call glue, things that everything needs, but are probably not the highest margins. They're not making a lot of things that have 60 or 100% margins, although maybe one day that will change. They make some stuff that has good margins. But I think the setup out here certainly looks to me like we've broken the low of 104.66, which is the March 6th low. And you could certainly see the February 9th low tested at 96.99. Take a quick look at the SMHs. Okay. And a follow-up question from Pete, which we'll get to a second. He still does not tell me where he's from. So Pete from Lutz, Florida. Semiconductor Holders Trust, you broke the highs. You really didn't have any kind of energy. You had this kind of a triple top. You spiked it one more time and you're back in it. You got 5 million shares on March 2nd, 103.51. Got to 105.15 today. You're already in that 5 million share high. Energy is going to be about the same going up as it is going down. So I'm going to say that there are probably better places to fish. We'll go through a few of those stocks before the end of the day. Pete says he's from San Francisco. He's the San Francisco treat. That's all I know. In fact, I was looking at a picture just yesterday because I was trying to send this picture to my friend. Probably can't see it very well. But when I stayed out in San Francisco, I stayed on this boat. I rented this boat down on Pier 39. I just had it out there because I was scanning it, send to my buddy. You used to be able to rent boats down there and stay on them in Pier 39 where all the walruses do their sunbathing. But way out there, which you're not going to be able to see, is Alcatraz, right there where I'm putting my big finger. But I spent months and months and months on that boat, and then would go over when I was done at night and sleep on it. But I'd go over and help work on the submarine that's over there in Pier 39. Used to be over there in Pier 39 too. Had a lot of fun. Anyway, Semiconductors Trust, you got the volume. You may not come down and pierced it. Energy's about the same. I'd be looking probably in some other places to find out if there's anything better. got a little bit. Someone was asking me earlier today about what I thought about the Chinese repercussions for the trade tariffs. And the first thing I sent to Andy Heck when I heard this morning is, didn't the Chinese just buy a big pork producer? Smithfield Foods, by the way. And they're now slapping tariffs on that same producer they just bought. So I think we announced $60 billion. They announced $6 billion. And they're slapping tariffs on their own companies that they bought. I don't understand. Is that the equivalent of putting a gun in your pocket and pulling the trigger and shooting yourself in the groin? That handful of other ones that I read just didn't seem to make a lot of sense. I never thought that they were going to buy all the Boeing planes they said they were going to buy. So that's probably a non-starter too. Again, I think by Monday, maybe we don't even hear anything more about these tariffs until we get maybe at least a list of them in a couple of weeks. And then another 30 days. We've got a very short attention span in this market. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And a question triggering a look at Google. So far, you're looking little better on volume today for Google. I don't like the energy off the top, off of 1178, which is this March 12th high. Energy really did come down 30% more than the energy up off the March 2nd low. You did have about 3.5 million shares yesterday to the 2.5 million shares back here on the 2nd of March. You're close enough that I suspect you're going to come in and test this high volume low, which has about 5 million shares on the 9th of February. You're basically sitting on the top of that. I think this that's why I'm thinking maybe there's one more day in this downside, and that's somewhere around 10:30, 10:20 on Google. Question in the den was, what happened to that giant office on a barge near Pier 39 that was going to be the demonstration location for Google Glass? If you don't remember that, those were the glasses that had the camera built into them. And certainly, or fairly quickly, people became pariahs because they kind of felt like Big Brother was everywhere. Silicon Valley people, not knowing decorum, decided to wear these things in strip clubs and other places that they didn't want people filming. They got the ignominious name, and I'm going to spell it so you don't think that I'm saying something else. And they were called Glass, Glass, holes, Holes. So the glass hole became a thing that you didn't want to be if you wanted to be cool in San Francisco and in the surrounding area. And that kind of was the beginning of the end. They never got the technology quite that right. And maybe there were a few, a lot of times people make products that just aren't ready because of technology. Intel's been working very hard at creating better technology. Most people now, though, are deciding that in augmented reality glasses, you probably don't want a forward-facing camera if you're going to go into the public. But yep, Google is Big Brother. So we'll look at that. Okay, so what else do we have? We can look at some other charts again. Do I have some more emails here? I think I do. Okay. Tony asked if this was the 3 gap play or the 3 drive play. It was the 3 gap play. Can you just financials and why there's sell-off? Right now, I think that people think that with all the turmoil, we may drop 1 or 2 rate hikes this year. I'm not one of those people, but there are a lot of nervous Nellies who are sure that the world's going to hell in a handbasket at any minute. These are the same people that call the police out for a ham sandwich left out in a public space. And you find out after a bomb goes off, then you have 20 of these ham sandwiches. And right now, Andy Heck has his trading sardine. I have my sandwiches, which is once someone sees something happen, they believe it's happening everywhere. And everybody's just kind of a little nervous. I suspect that they'll find some kind of bottom here in the next few days. But Citibank especially, I suspect, is getting into problems, becoming politically active. And I think half the country is not going to like it. So probably not a wise decision to do in a public company like that. I can have any kind of stupid opinion I want because basically I can't make you do anything. So that's my privilege. If I actually control and hold all your cash, probably be a different story, I would imagine. And Pete says he just caught a nice striped bass 2 days ago in the bay in San Francisco. Okay, let's see. So we covered those ones. We covered those ones. We covered the Tech Insider purchase yesterday. I just want to see. Okay, email from Basil. I think we're all caught up. Why don't we look at a few other charts as we have time? Let's take a look at. Someone delivered my DHL package. Thank you. Okay, ExxonMobil, been looking at this. In fact, I've been waiting for these to line up. Actually, it doesn't look all that bad. I would have liked to seen a little lighter volume off this high, which is the February 27th high. We're testing the February 9th low at 73.90 over the last few days. This thing's just been going sideways. Interestingly enough, we did get the Baker Hughes numbers I think I posted those around 1 o'clock, didn't I? Are they still in here? They were up 9. So from last week, so fairly strong move in Baker Hughes rig numbers. And again, there's enough supply out there that if everybody turned it on, the prices would go lower on crude. Today, where are they at here? Let me get those back up. And I need to get to my commodities page. Commodities, there we go. Okay, oil's up $1.49. Which I thought was fairly interesting, especially the rig count. But it probably has a lot to do with the dollar, which is down 46 cents at 89.01. We continue to see a lot of these bounce around. We'll also bounce around a little bit. Wanted to go back to TLT for today because this thing spiked and spiked again. Certainly looked to me, and it has for a while, that this is coming back down to 116 and 115 area. It's worked fairly hard to hold these levels. You're pulled back just a little today, don't have a lot of juice. I still suspect that you want this test of 116.51, 116 and 115.50. There's about 3 of them down in there. You want the TLT to test that before you think that there's probably an extensive trend either starting up or down in the broader stock market. I think that's going to be it. We're down 13 points on the S&P. Cash 36 on the Dow and down 56 on the NASDAQ. As I suspected today, the earliest I thought yesterday that I'd want to probably start really piling in for swing trades would have been the close today, and that still is a possibility. We'll keep an eye on it, but it's all about the volume, and we're about 4.6 billion shares in now, so not a real big day. Going in with a lot of people not wanting to stick their necks out at the close today. It could be fairly interesting to see how this closes. We're going to go to Dan in Oldsmar today. You there, Dan?
I am, David. Spending a great day out by the water.
Well, we're going to be back in just a second. We're going to break, so just hang on. We'll be right with you.
All right.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petrocurrencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal is 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. Hopefully we still have Dan.
Hey, David, thanks for taking my call.
Okay.
I was looking at Twillo, TWLO,
Mm-hmm.
and I bought a half a position, 33,
Okay.
and I was looking to buy another half, but it's done nothing but just go straight up since, even with a downturn in the market here recently. So I'm looking for a place to get in. Do I wait, or do I buy it on a breakout from where it is now?
Well, I'm thinking you're going to get a consolidation around this level. You're coming into this gap down that goes back to October 21st of 2016, and you're in a massive supply line. So it may take a while to chew through that on the way up. For people that are not familiar with what Twillo does, I'll take this time to go ahead and enlighten them. Twillo is a cloud company, but a lot of people, what is that? What do we do with it? Twillo allows people that don't have a giant YouTube facility or an Amazon Prime or a Netflix to put video together and be able to stream audio, video, and even have two-way conversations and messaging and everything back and forth. And they support all the infrastructure that somebody like Netflix or Amazon or all these other guys that can launch, a site where 20,000 people or 100,000 people could all watch the same movie at the same time. So is that the way you understand it?
That's the way I understand it. I work for a company that does security systems, and they're part of the backbone of two-way video communication on the security system.
Right. They're also they've gotten, I think the big bounce off the bottom has been that they've gotten a lot more into a single source of other folks just hosting their site content, especially video streaming and stuff from them. So they don't have to worry about IP routes and getting in fights with carriers. Twillo basically handles all that back-end stuff and just make sure everything runs smoothly, so you don't have to get involved in squabbles between IP providers and branching and all the other stuff that happens in it. Anyway, looks pretty good at this level, but my guess is that you got a ton of overhead resistance now. So that would be it. you were in this thing at 33.
Right.
What was your plan to get out?
It's actually, I bought this really more as a long term.
Okay.
Right. So as it's gone up, I just moved my stop up. But like I said, I was looking at it saying, I only bought a half a position, and I wanted to get another half somewhere down the road. But I don't see where this is pulling back.
Yeah, I don't think it's pulling back so much as going sideways for a while. So maybe give it a week or two, and if things still just going sideways and it's got light volume, you might just have to add there. Everything seems to be going well with the company. I checked out a few things over the break. It's just that you're going to have so much overhang in the stock, which is the worst part of it. Right?
At that $70 mark, I saw a lot of the volume that had come off of that it came off that with.
You've got a lot of people that are probably buyers in there that are every time it goes up a quarter going to be thinking about selling. And that's just you just have to chew through that if the company's going to continue to do well. Everything I see says it's going to, and it seems like if you're not one of the big four companies, that this is a fairly decent solution to all that stuff that you don't want to get involved in unless you're a really big company. So it seems interesting, seems like a good product. Chart looks good. You had very good energy off the bottom. You also had a wonderful low out here that got tested with lighter volume. That May 8th low at 2280 had 7.4 million shares. You just got it with 2.5 million shares. If I would have seen it, I would have been all over it down there, because that was a beautiful setup and test of the lower. You didn't quite get into that 2280, which is why I probably never picked it up on my scan. But that was probably close enough. If you see something test a low on 25% of the volume, it's generally good enough to go ahead and think it's about as good as testing a low on 75% of the volume and actually piercing that low. So pretty good setup, pretty nice run. I just don't see how this thing moves a whole lot in the near future. But that's kind of a great deal of what I'm looking at in the market now. There aren't a lot of stocks that look like they're going to have huge runs off of them. There's a handful of them that are making good signals. So I think I'm going to be probably parked in a lot of individual stocks here for the next cycle, however it lands or runs. Anything else?
Great. That's it. Thank you very much.
Well, thanks for the phone call. You can be like Dan and call me at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always put a message in the den. Okay. So let's take a look at this market. Go back and see what's happening. We're off 20 points now. Again, hard to think that a lot of people are going to pile in front of this. Everybody's probably a little bit scared, even though 20 points down on the S&P is really not that much. And again, it's all going to be a great deal about what's going on in the volume in the end of the day. Let me check my stocks just to make sure everything hasn't changed. And pretty much what I was looking at all day. No big change for me, but I'm not in the index. So I'm kind of sidestepping all that. Question about Apple from Paul. Paul is also from Lutz, Florida, apparently. You did test the previous high. You did do so on the same amount of volume. You've come back where this thing, 168, where this gap is on the 15th of February. Apple has a lot of problems. I don't think you can get away from that fundamentally. One of those problems is not volume today, though. You gapped up on 51 million shares on the 15th of February. Today, 51 million shares. Today, you're down on 24 million shares and 41 million shares yesterday. So you guys started to get into that with some volume. Volume's not there today. So that area about 168 is about there. I know I had some people that had some puts on Apple, and I think this would probably be about where I'm out on this one if I had the puts. We're probably going to get some kind of bounce. This thing, when you look at the options, really looks like 170 is kind of where this thing wants to hang out. Could you do a little ABC and set up for the 158 area? I think that's also a possibility on Apple. They just have a lot of problems, and that's why I'm kind of thinking that for most tech stocks, the SMHs, chip stocks, or SWKS, some of these other ones, it just looks like this sector is very tired. Could you go back and retest the highs? I think you can on some of these. Question is, they're going to have to get through their problems. That may take 3 or 6 months. Anyway, we'll look at Skyworks Solution when we come back. This one, that really doesn't look that much better.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And well, we've got the first defectors from Facebook. Elon Musk taking both his SpaceX and Tesla pages down from Facebook. I guess that happened in the last hour or so. And we'll see if that catches any fire or if Mr. Musk is back on Facebook in a week. We were talking about Skyworks Solution when we left. Now, this one tried to get up into its high of 6 million shares on November 6th. On March 12th with just 2.75 million shares. So half the volume, never made it to the top. The energy was just okay going up to that hop. It's not really accelerated more than it went up on. But my guess is that's why I'm thinking that you've got one more day, is a handful of these stocks are just above these support levels, and we're probably going to see those come Monday or Tuesday. So I think there's not a whole lot left in the barrel for the downside, but it is going to be interesting how a lot of this stuff actually sets up. So we'll continue to look at that. But I think there's going to be some great washouts to buy. I've already picked one in the long-term newsletter, the Tech Insider. I got a handful that I sent out this afternoon to my subscribers for the Tech Insider of a lot of these stocks that were testing previous lows. That XOM one was one. There's a handful of others. But a lot of stocks that have been hammered over the last couple of months also look like maybe they're almost washed out, and you could have some fairly decent bounces off of those. But again, those are, trades of a handful of days, not weeks or months. So it's going to be interesting trading. It's going to be a bi-directional market. But again, we started to see volume yesterday. I think we're probably going to see volume in a handful of stocks. That's probably going to let us see some kind of selling climax, maybe at the close of the business today, maybe in Monday or Tuesday, setting us up for fun buying next week. And the options really haven't changed. They show, 50, 80 points higher. So might be some good trades in there for a handful of days next week, which is what I'm looking at. In the meantime, sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.